How does the IRS use artificial intelligence to detect tax noncompliance, civilly and criminally? When the general public says the IRS is using AI to catch tax cheats, what they really mean is this. The IRS uses artificial intelligence, machine learning, and advanced data analytics to rank tax returns by compliance risk. They don't generally set out to prove fraud, but they are trying to decide where to look first and how hard to look. And once your return is flagged, you may already be in a high-risk audit lane before you ever even hear from the IRS. What's meant by AI? Well, the IRS does not publish its algorithms, its model weights, or its DISC scoring thresholds. You're never really told why your return was selected by audit, either way you're counseled. But the IRS has publicly confirmed that it uses artificial intelligence and analytics to select complex partnership returns for audit, identify high-risk, high-income individuals for audit, route cases into civil or criminal enforcement tracks, detect refund fraud before the money is released. This means that your return can be tested against far more data points than any one human auditor could review manually before you're even selected for audit. How does AI show up in real life? First, refund fraud detection. Machine learning systems analyze returns before refunds are processed. If flagged, the IRS is going to freeze the refund, demand verification, and route cases for deeper review. From the taxpayer's perspective, this feels instant and automatic. The second way is in complex audit selection. The IRS now uses analytics to focus on returns where complexity and historical markers indicate underreporting is highly likely, especially large partnerships, flow-through entities, high-dollar transactions, inconsistent allocation patterns. Even technically correct returns can get audited if they match known risk profiles. Third, criminal tax investigation support. Listen, AI does not decide your guilt, but it does help identify patterns that often correlate with criminal intent. And it's intent, not math, that turns a civil audit criminal. Here, let's talk about what AI looks for and why it's dangerous. IRS analytics focus on patterns, not excuses. Common red flags include mismatches between returns and third-party data, patterns of reporting taxable income that is insufficient compared to your demonstrated lifestyle that they check out via social media, repeated losses in profitable industries, offshore activity, or crypto inconsistencies, deductions that don't fit industry norms. Once these patterns appear, the IRS doesn't ask, "Did you mean to do this?" They ask, "Does this look intentional?" And from there, your communications matter as much as your documents. When AI flags a return, the audit can quietly become an eggshell audit, a reverse eggshell audit, or a parallel civil criminal development case. Look at my website for those definitions. At this stage, casual explanations are dangerous. Guessing can create criminal tax admissions. Overproduction creates narratives. Listen, you're never going to talk your way out of a data-driven mismatch. You must manage these issues strategically. You cannot control IRS analytics, but you can control your response posture. That starts with clean, forward-looking tax compliance, no matter what's happened in the past. Disciplined audit communications, controlled document productions, and early legal strategy. If there's potential willfulness in your fact pattern, you should involve criminal tax defense counsel before responding. We really shine in this area. In some cases, the safest path forward may be voluntary disclosure if you're not currently under audit. But timing is everything. Once the IRS starts investigating tax fraud, your options disappear fast. High-risk audits require legal strategy and tax execution working together under privilege. At the tax law offices of David W. Klasing, our attorneys control all communications. All of our CPAs work inside a legal team for a law firm. Sensitive analysis stays protected where the law allows. This integrated approach matters when analytics have already flagged your return. So in closing, if IRS AI has pushed your case into a high-risk lane, you need the right representation, built for damage control, not convenience. Schedule a confidential reduced-rate initial consultation at 800-681-1295 or visit klasingandassociates.com today. Thank you.